In such a scenario, what do you think the capital markets should expect? As in, will they reconcile, or what does it mean for the market in general?
Probably they have the best relation as opposed to what they had earlier. But
the positive aspect of this is that it's a democracy which is functioning, and the central bank is autonomous. So, we should look at it from a constructive point of view, and maybe from foreign investors' point of view, when we go and convey the message, this is a more positive message. One factor about, say, India and China, we often, compare India, China, potential versus. So, people say that, okay, India's growth is despite the government. As everybody said, that our potential is much higher. And China's growth is because of the government, because people have become less entrepreneurial, less because of, decades and centuries of, authoritarian government. But another important thing, what we have seen, that when you go to foreign investors in the world, the Chinese are always positive, patriotic, and always optimistic about what's going to happen inside the country. But India is a nature of democracy, that we become critical of ourselves a lot more. So I think that RBI has not followed what government wanted to do is a small matter. And if you have been reading newspapers and following, then the RBI has indicated that they might do the rate cut in January. So a rate cut being deferred from, say, November to January is not such a big deal to my mind, as long as it happens. But of course, if RBI is autonomous, that is good for the banking sector, that is good for the monetary policy, and we may or may not agree with their policy decisions, but in a way, the judiciary, the democracy, and everything is functioning very well, is positive from a longer-term perspective.
Okay, further questions. The gentleman in the second row. Yes, please.
Good afternoon. My question is to Ramdev Agrawal. So in the last 2-3 months, the market has slightly risen, mainly because of the various government reforms and other such things. So is this bullishness actually happening, or backed by fundamentals, or it is just the market sentiments and investor sentiments?
So, in the markets, why it has moved, there is always good explanation. The foreigners came, bought $18 billion worth of stuff, all the domestic sold, there is no IPOs, so, clearly the demand is more than supply, so markets clearly rose. But of course, the news flow, which changed the opinion about, the things which were going on. Because markets don't go up or down because of buying and selling. For every buyer, there is always a seller. Market goes up, or stock price goes up or down purely because the opinion changes. And that's why when Obama wins or loses or whatever happens, next day markets open at 5% or 10% higher. Because no buying selling has happened. The opinion has changed about the stock or the market. So always markets, stocks move purely because of the change of the opinion. Now in last two months, what happened was the moment Mr. Mukherjee went to Rashtrapati Bhavan and TMC thing got resolved, there was a move about, there's a wholesale reforms, things were announced. But more than what is the substance of the reform, the mindset change in Delhi that yes, they are willing to act. I think that changed the mindset here among the investors that things will happen. They're not sleeping and things cannot go on like this. So that change of the mind slightly making optimist kind of thing. So you see all the markets, if you look at the automobile market or consumer markets, October was a brilliant month. So, there is a kind of change of sentiment in the last 1 or 2 months, and that reflected in the marketplace. Now, whether it continues, it all depends on, the actions of RBI, actions happening in the global markets, and what is the behavior of the FI. So, there are a whole lot of things which is going to determine. And one of the things is that in this quarter, we saw the earnings, the earnings announcement is still on for this quarter. And that earnings announcement has been which is the real cornerstone of any stock market, has been brilliant in the sense that better than expected. And I think that has also provided some kind of stability to the market.
Okay, we'll take, since you've taken the mic in your hand, please stand up.
Yeah, this question is to Mr. Tarun Kataria. It is somewhat related to the pharma industry. Recently, in year 2012, many multinational companies, the patents will be getting expired soon. So, as we all are talking about the growth in the GDP, so how will this affect the growth in the GDP because of the expiration of various patents of the multinationals? The export will increase. So, how much percent of the GDP will constitute with this pharma sector?
It's a very good question, but to my mind, pharma in itself is a very small component of GDP. And then when you go from patented drugs to basically a generic version of it, you're actually going down the GDP curve, right? So to my mind, it changes almost nothing from a GDP perspective. But from an M&A perspective, and I'm sure Ashok will have a comment on that as well, creates a whole bunch of M&A opportunities in the pharma sector. And that's really what we're seeing. So We're seeing a lot of consolidation in generic pharma because there are so many of them and they're not big enough to have scale to compete and to survive over a longer period of time. So I think that's more of the pharma story than necessarily saying because Pfizer's Lipitor is going off patent, which was a $2 billion a year drug, therefore India's GDP is going to go up. I don't think it makes a big difference. There are, as they say, many other fish to fry, including getting our infrastructure right, which will create momentum for GDP growth. But it's a very interesting way that you're thinking about it, but I don't think it moves the needle.
I've got 2 minutes. Last couple of questions, quick answers. We'll have him first because I promised him that.
A question is for Mr. Agarwal. So you mentioned that in October the automobile sector performed fairly well. But given the recent spree of events, the labor unrest we had, and another automobile giant facing the same, and there are MNCs who have already tied up, have JVs now, and some trying to venture into the country. Where do you see the automobile sector heading towards, and how do you, our country is known for the labor force, cheap labor force. So how do you think that the automobile sector will be impacted, and will there be a considerable impact on the economy or not?
Automobile, as it is known, is almost the largest industry, organized industry in the world. In terms of at least sales and value added. So in India also it is not going to be any different. We'll need, after roti kapda makan, you need gadi. So for personal transport, for moving the goods from one place to other, you need massive amount of transport. So as far as the demand for automobiles is concerned, it's maybe a month or two, it could be cyclical or whatever. There could be issues, but per se demands are going to go multifold from here. And in some of the niches, we have created a global competitive advantages, like say two-wheeler and all. The kind of price $700-800 you can produce top class motorcycle, and you can ship it anywhere in the world at highest possible margin. So I think you can leverage the advantage of scale in India. So I think the possibility for India in next 10-15 years in automobiles, and apart from the demand, the beauty is that in every segment you have one or two players. It's a very concentrated kind of segment. In trucks you have just two guys, third, fourth are trying. Motorcycles or scooters, which is a kind of millions of bikes and scooters, just about three. We used to call it 2.5 players. So now the third player has come, Honda, Hero, and Bajaj. So in cars you have 50% market share with Maruti. In tractors you have 50% market share with Mahindra & Mahindra. So this kind of, you have massive growth ahead and consolidation. So it's a perfect place for kind of making a lot of money.
क्यों फिर से लेट? इसका मेमोरी स्लॉट कहाँ पे है? हेलो, मेमोरी स्लॉट? भाई साहब, आपको इसके बारे में
ऐसे डिलीवरी बॉय से डील करके देखा, अब ये भी करके देखो. So here's the memory slot and the memory is also ये भी करके देखो.
Increase your playing field. Introducing BSE 100, India's most broad-based derivatives traded index.
Is life measured in trophies, in frequent flyer miles and miles per hour, in business brunches and timeline crunches, in round tables and corner offices? Or is life also measured in the lives we touch? Be remembered for good. Seagram's 100 Pipers, pure music, true legend.
Just a final thought from each of you before we wrap up the show. Nirmal, I'll start off with you. So based on all that we've seen, and it's pretty much a repetition of how we started the show, but your basic sense, we are right now in November 2012, December 2013, or possibly March 2014. Do you think things will improve significantly from where we are right now, for the economy and for the capital market?
I'm quite an optimist, so I think they will improve for both, for the economy and for the capital market. Very quickly, why? For the economy, they can't get worse, and we've already seen that government has realized this, and they started moving in the right direction. And for the capital market also, because the liquidity conditions are good, commodity prices are unlikely to go up further, which puts pressure on our deficit. And interest rate cut will happen sometime soon, and I think all these factors will contribute to the rally in the market.
Ashok, you mentioned GST being the single largest factor. assuming that that also comes into play, your thoughts on what we do over the next 18 months?
I'm generally optimistic both for the economy as well as capital markets, with two caveats. One, we do need to have a parliament operate, because when the parliament doesn't operate, the country's critical bills come to a standstill.
There's no certainty it will operate this time.
Well, so that's why, as I said, we do need to see our parliament operate. Then if you have differences of opinion, sort it out on the floor of the parliament, but we do need to see our parliament operate. And two, should there be a midterm or a pre-14 election, there would be an element of uncertainty as to how the power base will fructify, and that has the ability to dislocate any growth or in economy or in capital markets for a period of time. But for these two factors, continue to be optimistic.
Great. Tarun, your thoughts?
Yeah, I'd largely agree with that. I think with the exception of sort of event risk, and I would say what Ashok said is actually event risk, I would be constructive. I think the market can very easily be 10 or 15% up from here by the end of next year. The macroeconomy, I reckon, will be slightly better. So if you sort of look at what fiscal 13 holds, which I think will be, let's say, 5.6%, can we be north of 6% for fiscal 14? The answer is yes. But I think the point is, whether it's for India, whether it's for the planet, as I say, what we saw for the 15 years leading up to 07 will not be the 15 years from today.
Okay.
So we should be, should get used to lower GDP growth because, there's political dysfunction around the world.
We're not sounding like the argumentative Indians, Ramdev, and I'm sure your answer is pretty much in the same lines because you are constructive in your thoughts for the economy and the markets over the next 12 months.
Yeah. See, one of the things is that we don't have political consensus, and yet this country has to go on. So there is another master called Forex market. So rupee dollar parity decides a lot of things here. The moment rupee crosses 56, things start happening in Delhi. So my sense is that we have a master which is invisible, but which is very, very effective, because we are very globalized. 40% of the trade economy is based on trade. And this is one master where even if politicians want to control, they can't control. So if they don't act properly, if they don't bury their differences, Forex market will act. And rupee will go to 60. And then you see the chaos breaking up. So I think it will not happen. I hope it doesn't happen.
Yes, all of us hope that.
It quickly goes to 57 so that Delhi starts acting very quickly again.
Okay. Just a final thought, and the benefit of that thought goes to Nirmal because he studied in the same campus that we are studying right now. Any advice that you have for the capital market students?
For capital market students?
Yes. I caught you unawares.
I just can summarize in my experience of last 25 years. In fact, I passed out from NM College almost 25, 26 years back. There's a great career from a longer term perspective, but it is for those who have as Peter Lynch, somebody said it very nicely, that investment requires more stomach than brains. So if you can handle volatile world and the cyclical changes, then only get into this and look forward to a good career, but a bumpy ride. It's not going to be very steady growth kind of a career.
We'll just end with a small exercise that happened to me when we did our B school. And the question is to all of you guys, how many of you think you can prescribe a medicine without getting a medical degree? Raise your hands. You can. Okay, 2 or 3. Great. Please don't do it. How many of you think you can fly a plane without actually learning aviation? Great. How many of you think you can invest in the capital markets without getting the degree that you're studying for? And yet, all of you are here studying for the same degree. Well, education never hurts. But on that note, thank you so much for joining here. A round of applause for our panelists out here. They have spent their time to speak to you guys. Precious time, I might add. And for all the television viewers who joined us as well on this very special episode of Back to School and 18 Hour Diwali Special, thanks so much for that.
Inspiration is everywhere. Capture it with Easy Clip. See it with AirView. Do more with Multi-Window. Whenever and wherever you need. Samsung Galaxy Note 2. Incredibly creative.
Star,